Well, welcome back to another episode of How Real Estate Changed My Life. And if you've listened to any of my episodes up to this point, I thoroughly enjoy visiting with people that can say real estate has changed their life. And what's more important is I want to talk to people that have done things differently, not the one trick pony. Everybody just bought a rental house, held it forever, and then kept it. And same thing with apartment. Like I just want people with all different backgrounds, all different stories. And today I've got a great gentleman who has a similar story to mine in some regard, but he just took he took a different fork in the road and went multifamily route with syndications. So Randy, I would love for you to share your story about how real estate's changed your life, what you've done in the past, how you made some of your decisions, and then what you're doing now. So Randy, introduce yourself. Tell us about you.
Well, first of all, Kyle, thanks so much for letting me be on your show. It's a pleasure. It's a real honor, and look forward to spending some time together. So, Randy Landgenderfer, Houston, Texas. I've been in real estate for I've been in the multifamily space 10 years and probably single family 3 or 4 before that. But my journey really got started. I live in Houston today. At the time, I was living in Cleveland, Ohio, and a brother-in-law came to me and wanted to flip houses, be hard money lenders for those that understand that, where we would lend money to a group to go out and buy a house, rehab it, and sell it, and we would take a portion of the proceeds or an interest rate, basically return. And that was back in the heydays of 9 and 10 when you were buying a houses 60, 50 cents on the dollar and rehabbing them, putting 20 or 30 cents in them, and then taking the difference as profit. They were plentiful because of the mortgage crisis then. And so it was a very fruitful model. But as you know, that kind of dried up across America as home prices rose. So that's how I got my start. And I got the fever. Let me take a step back from that. My journey first started when I first got married. Our first home, I was a real estate wannabe. And my wife and I bought a duplex. And so we lived in half and rented out the other half. And we were a house hack, basically. And that was a lot of fun. Got busy with life, raised a family, career, chasing the corporate gig. And about 2000 and, 12, 13 is when the life change happened for me, when I realized I really needed to find another stream of income. I was working for a private equity firm in Akron, Ohio area. And this was in the downturn. And I was afraid I was going to be laid off. And I was not because of anything I did wrong, just because of the economic times. I made a really good buck, and I had a target on my back. And with a stay-at-home wife and 4 kids, I figured I better get my butt busy. Yep. So that's when I started looking at single-family fixes and flips during that time period. I then got real motivated, had to find another job as that one was winding down. The company was being sold. So I moved to Houston, Texas, came to work for a large academic medical center here, and was just amazed at the Texas landscape on real estate. And I looked at, I remember in Cleveland, there were 1 real estate groups to get associated with in Cleveland, Ohio at the time. And I remember Googling that when I first came to Houston, and there were no less than 13 different groups. So I got real busy when I first came down here. My wife and kids weren't here. So I went to different what we call meetup today at the time, every night of the week, different places in Houston, trying to learn the market, trying to learn the people. And I learned about multifamily at that time. And that just really seemed to fit my personality and that search, because multifamily, you can buy large multi-million-dollar assets at non-recourse loans. So I don't have to be responsible. If I'm responsible for what I got in it, I would lose my money.
Right.
But I'm not responsible. They can't come after my personal assets, my house, my car, et cetera, et cetera. That's the beautiful thing about multifamily, and the concept of leverage, of using other people's money, of getting investors involved. So since 14, I've been doing that. I did my first passive investment. That's where I put my money in other people's deals, a couple of them between 2014 and 2018. 2018, I did my first true syndication where I was the lead partner, myself and a couple other guys. We bought a 139-unit building in Beaumont, Texas, about 130 miles east of Houston, between Houston and St. Charles. We ran that, had all kinds of problems with it, fire and just all kinds of problems. But I ended up selling it and getting
That's
out
the
of
problem.
yeah, that's, I mean, yeah, it was a real baptism by fire. I learned all about property management big time on that deal because I became the de facto regional manager. Another thing about multifamily is you get to hire property management there. It's got economies of scales, which is much easier to do that. Got involved in that. So I've done 5 or 6 deals since then as a general partner, from Greenville, South Carolina to Tucson, Arizona, Houston, Dallas, are the primary areas. And I still like that model today. But what I've learned is it's when you have partners, um, it's kind of like a marriage. One of my mentors, Rod Khalif, said, partners are just like a marriage. They're easy to get into, but painful and expensive to get out of.
Yeah.
And I think that's very true. So I
And you want
fast
to make
forward.
sure they're on the same wavelength. Like you want to meet expectations because that's people say they want one thing, but then 2 years down the road, they're saying something different. And you're like, but this is what we agreed on, and this is what our goals were. You can't change it midstream, but then sometimes you have to. So yeah, that can be a challenge.
And people talk the talk, but as you would say, don't want to walk the walk. Sometimes they say the right things, but when difficult times come in year 2 or year 3, they seem to be busy with other projects or can't get a hold of them, et cetera, et cetera. So it goes back to just the finding the right partners. In my mind, finding the right partner and finding the right deals. And so there is a large industry out there today that is educating all kinds of new syndication because it's the hot topic. A partner and I have actually formed our own education mentoring group ourselves that we offer to people if they want to, because it is such a big space, and we think we have a much more personalized approach, hands-on approach than
Yeah,
somebody else.
and it's important to learn from people that are actually doing it. When I got into the business in the early 2000s, I didn't know anything, and I didn't know who was legitimate or who was like actually doing the work. But when you really dug deep, there's a lot of people that did a deal and now they're selling you a class. And so now, because that's a easier money, bigger money, whatever. So there's a big need for people that are actually actively in the industry, knowing what they're doing and doing a meeting of the minds groups and trainings.
When they can really be expensive. I mean, some of the big box
Yeah.
offerings are $30,000 plus.
Isn't that wild?
Well, it is if you got, I mean, it's cool if you got money, but
But
I wasn't.
you got to really invest a lot more money to get that kind of
Oh,
return
yeah.
back. And then you got to figure out what's a delta. Like if I'm going to put 30 grand in, I better as heck get 100 back on top of what I invest.
And the time for you to get that 100 back is not going to be overnight. So,
Yeah.
um, yeah. So briefly, and what I've continued to love about real estate is there's so many, as you said, there's so many different aspects of real estate you can get into. There's single family fix and flip. There's single family buy and hold, single family wholesaling, multifamily syndications, buying small multifamilies for yourself that you might want to hold for a while if that's your deal. And so yeah, it's kind of what I'm looking for today. Is I've done the single family for a little bit. I've done syndications. I'm not giving up on the syndications. I'll continue to do those. We did a deal last year, a new one, but I'm looking for deals that have something unique about them or something different versus this typical value add project.
Mhm.
So this one was a build to rent and up in your neighborhood community in Melissa, Texas.
Yeah. Super
So
popular right now.
the growth up there is crazy. And you're right. There's a lot of development going on, a lot of people moving to Melissa, Texas. So it fits all the demographic criteria. And I think the build to rent, they say that's going to really be a class of its own as it continues to boom in America. Some people
Yeah.
don't want to live in an apartment building. They want to live in, these are going to be townhomes, 1700 square foot townhomes.
Yeah. Yeah. I think we're creating, we already had a renters class of people that are like, and then it used to be, oh, well, I'm going to rent and then I'm going to buy. And I think the average first time home buyer's age has gradually gone up. I don't remember the stats, but kind of thinking that there's going to be a larger group than in the past and just never buy for multitude of reasons. One is affordability, but two, we have a lot more transient professionals now that normally would have bought a home and lived in an area for Akron, Ohio for 20 years or 10 years. And nowadays it's, well, I might work here for 3 years and then I'm going to go somewhere else. I don't want to have a house to lock me down. So I think that that renter mentality has gotten really ingrained. Um, we once heard about people like, oh, well, I'm never going to own because I saw my parents lose their house in 2009 and 2010. So I'm never going to own. But that's
I think
really,
it's here to stay.
it's so shooting yourself in the foot when you look at
Well,
net worth
yes,
of someone that owns a home and net worth of somebody that doesn't. It's like two zeros.
more,
Yeah,
at
it's
least two, if
crazy.
not three.
I want to say it was like $400,000 was the average net worth of a home owner, and it was like $4,000 or $6,000 for the median tenant. That's huge. Um, but I think there's a solution. I think this is where guys like you and me come in, and I have a lot of clients that rent where they live, like they live in LA or they live in Vegas or whether they live somewhere else, New York. I got some Seattle folks and they where it makes sense. So they buy a house here in Dallas Fort Worth, and then that's a rental. Like they're not looking for cash flow. They'll hop off a plane and buy two houses cash or even finance them, and then just sit on them and say, hey, I don't own where I live because it just doesn't make sense for me because I can rent for a reasonable
Yeah,
amount. To buy would be make not sense, but I'm not giving up the benefit of being a homeowner. So what they do is they buy rental houses in Houston or Dallas, and then they just have good houses. They just good house, like nothing crazy, nothing elaborate, but it's
yeah.
their way of still getting that net worth value out of owning real estate.
They own your classic 3 bedroom, 2 baths
Yeah.
garage in someplace in the Metroplex or Houston, Austin,
Yeah.
and you know,
Bread and butter
I
homes.
can, if I lived in California, I'd understand that too, because you can probably buy 2 or 3 houses in Texas for the price you'd buy one in
So I
California.
get curious every once in a while about who my clients are and where are they from and what's their situation. And one of my gentlemen, um, he had a he has a rent house here, and it was just a little make ready he needed to do, nothing crazy. I'm like, I'm just kind of curious on, what's his house look like? So I just took the address, dropped it in Zillow, and I'm like, he bought that house, I don't remember, 2017. I think it was like a million two, which is not cheap, but
That's
not,
in California,
yeah, it's California.
right?
And nothing, I mean, I'm not gonna say 1.2 million is not a big deal, but like there's a lot more of those than there used to be. But then and then Zillow has like today's estimates like, well, 3.5 to 3.9 million. I'm like, that was 8 years ago that he bought that house and he's got 2 million in equity from,
Tripled his equity,
yeah. Um,
and it's probably a 2,000 square foot bungalow or something.
yeah. And the previous MLS listings, it had like this amazing view out the back. But I'm getting a little sidetracked, but like there's people out there that they buy in other places because it makes sense. Just like you were talking about your multifamilies, you listed a lot of places that aren't Houston of where you're looking to invest and where to
I,
have. How do you decide where you invest?
well, I think I subscribe to what the real estate guys say. Always says, live where you want to live and invest where the numbers make sense.
Yeah.
Pretty simple. I mean, so I grew up with the paradigm of saying that, I was a house hack and did in my community. I started out there and stuff. But really, when you look at it, if you got good property management, you're in the single family space, or if you're in the multifamily space, if you got good property management. I don't know. I don't have to visit the property every week or every month. As long as I got a property manager on site. I try to get to my multifamilies at least once a month, pretty much. Well, at least to just keep eyes on them and make sure what's going on. But I don't have to. So that's a paradigm change. It's the same thing when I was flipping homes living in Cleveland, Ohio, out of South Florida, Dade County. We would go down there periodically to look at the houses and look at the teams and make sure, we weren't getting scammed. But it's a mindset shift that you can easily get over. I think it's comfort zone. People want to invest where they know, and that's a good idea. Be it single family or multifamily, to start in their neighborhood if that's what they want to do. But I really think, going back to how real estate changed your life, for me, it was the essence of one, working myself out of a corporate job, and two, realizing that fulfillment of the dream that I really wanted to be an entrepreneur in real estate. And so I'm fast forward today. I left the corporate world 2 years ago, and I'm just loving life.
So what did it feel like waking up that first Monday afterwards?
It's funny because I have people in my office. Oh, what are you going to do the first day of retirement? What are you going to do the first day of retirement? You're going to go to golf? You're going to go on a trip? What am I going to? I'm going to go to my office and do the same thing I used. Except I'm working on real estate.
It's yours. You get to control it.
Yeah, it's exactly it. I'm at the season of life where I'm blessed, and so I don't necessarily have to do real estate, but I want to do real estate. I enjoy it. It keeps me mentally and challenged and engaged. And I think I don't know anymore. I just don't know. I'm an MBA finance, a CPA, so I understand all those concepts. But really, you need some kind of a portfolio boost to really make sure you have retirement savings someday, because the stock market and stuff is up and downs and it's ebbs, But even so, my last employer here in Houston, I even mentioned Baylor College of Medicine, had a $1.5 billion endowment, and it had the traditional diversification strategy of stocks and bonds.
Mm-hmm.
When I left, they included real estate as a separate portfolio, a separate asset class.
Mm-hmm.
So they had stocks, bonds, and real estate. And anywhere from 8 to 12% of that $1.5 billion was in real estate projects. So from a diverse, and they did that because it boosted the portfolio returns.
Mm-hmm. Oh, yeah.
So I think a lot more people ought to be considering real estate as a passive or active, whatever they want to do.
Just to look back and figured out what kind of retirement fund you would have if you didn't do real estate.
Never done that side by side. Yeah. I've never done that side by side comparison to see what the numbers would have been, because I don't know, just want to spend the time. I'm looking forward. But it would have been different. It would have been different.
Would you still be working in the corporate world?
I'm sorry?
If you didn't do real estate, would you still be in the corporate world?
That's a good question. I've aged out, so I probably could have. I would have stayed. Yeah, I probably would have stayed, just because I was at a position where I had a team that was working for me. I didn't have to. I wasn't exerting a lot. It had been on kind of autopilot, but I just didn't want to do it anymore. I'd been doing it for a long time, and just wanted something different. And this invigorates me. It keeps me young. It makes me want to get up in the morning. And as I tell my wife, I'm just a nerd. I'm a real estate nerd.
So do you think your stress level's lower than when it was corporate world?
Yes. Yeah. Well, I shouldn't say less. It's just a different kind of stress, right? As an entrepreneur, you get to work any 12 hours you want, I guess. That's what somebody said.
And you have the apartments that catch on fire.
Yeah.
But there's two ways to take that. Like I have those situations that happen to me on my properties, and I'm telling you, I used to stress out over those things, and now they just happen. It's because I've mentally prepared myself. Like 3 things are going to go wrong this week. This is just the second one. Like it's just, and the thing is everything can be fixed, and nobody's going to like air up the tires of my house and steal it. If it burns to the ground, insurance is going to pay for it. If a tenant's a booger, I'll get them out. Like all of these things are solvable, and I've got my calculator. I know how to solve that equation. So I just don't let it get to me as a result. And I think when people go into real estate with that, like everything's solvable, I think their anxiety is a lot lower, and they just know how to handle it.
That's a really good perspective, Cal, because at the end of the day, it's a business, and it's not a get rich quick scheme.
Right.
Either one of them. And I think so many people look at it as partially a get rich quick scheme. Yeah. They're willing to spend some time at it, but it's not a get rich quick scheme. And, it's a business. Things can't go wrong, and they do go wrong.
Yeah.
You got to plan for it, as you said.
Yeah. What I've seen in real estate is you do have the people that are jumping in for the get rich quick. And I probably should have a couple of those guys on, but it's really not rich. They think it is, but it's not. It's either you can get real high income, or you can get real good long-term wealth. And you get to choose. You can't really do both at the same time, because you're getting that get rich quick money at the expense of long-term benefit of holding the house or the apartment complex or the 5-year-old or whatever, or the tax deferred exchanges or like the tax advantages of owning the real estate. You're a CPA, you know way more than I do. Like it's insane, like the benefits from
Oh
what
yeah.
I can tell, versus the wholesalers, which is the get rich quick guy or the flippers. Man, they can make 200, 300, 400 grand a year, but man, that tax bill is big. And then they got to figure out what am I going to do next month because they like,
Yeah. And
what
they're
am I going to do next
constantly
month?
churning.
Yeah.
They're constantly churning. And you just, I mean, so there's again for your audience, I mean, there's just a ton of ways you can get in real estate. In my coaching business, help people understand what do you really want to do? What, I mean, do you just want to, invest passively and sit back and enjoy it, or do you really want to buy a multifamily property and I started out in syndicate family and single family, and you're still doing it. And that's a great place. I mean, I tell people the single fastest way to make cash is to flip houses because you're going to make good returns. It's work, but you're going to make good returns versus in a multifamily. You're right. You're going to get small distributions, but you're going to hold it for 3, 5, 7 years.
Yeah.
And the real return doesn't come until you sell it, is when the real payday comes. I just had one that was sold in January of this year, and we finally got the proceeds a week or so ago. And it was handsome profit for 9 years, and it's a 3.5x return.
Mhm.
So that's good money.
Yeah.
I can live with that. They're not all like that. Some of them have been much smaller, but shorter. So I say it's a go slow, go steady, and build wealth program versus the get rich, get quick scheme.
Yeah. That's my logic too. So I think you mentioned it, but I do know you coach people on real estate investing. So tell me what a typical person that you work with is like maybe their demographics for uh, maybe where they live, what kind of income they have, what kind of expenses they have, and what their goals are. Kind of give us a run through of what you've helped people do, either thinking through the process and execution or what. So give me a little bit of feedback on that.
Yeah, the program's still fairly new, so I haven't got anybody gone full cycle. We just started it in 24. But really the demographic profile is the person who has been involved, probably wants to be involved in real estate, has a little bit of knowledge, wants to be a multifamily owner. It doesn't have to be a syndicator. Maybe they just want to buy an apartment building and they want to know how to do that. So they're probably 40s, 50s or so that have a little bit of cash disposable cash that they can invest. And they're looking to, as I said, on that portfolio side, to boost their returns. And everybody hears that real estate is the way to build wealth over a period of time, and they're looking to dip their toes in the water. And so we offer them, weekly. We have weekly coaching sessions with them, and then we have an online program. They go at their own pace, show them how to do it. It's 13 different modules with multiple little short videos in each, telling them anything how to write a letter of intent, to how to identify properties, how to build your team, how to talk to brokers, et cetera, et cetera. So, I mean, it's like single family. There's a lot to do in it. It's not just get rich, give some.
And I think you hit on something important is like you mentioned like letters of intent. Like nobody knows what that is until they needed one.
There, till they get there.
So what's I think different about real estate is all the real estate investment knowledge. I mean, I got a degree from a good university and I had a good corporate world experience, but as far as real estate investing, I didn't get that knowledge from college. I didn't get that knowledge from my corporate job. None of those set you up for it. Everything that I've really gotten is from visiting with people like you and my other like circles of gentlemen that they're a step ahead of me. And the thing is like it's a different way of learning. You learn from other people, and real estate's a very giving environment. In general, we have a very like abundance mentality. It's like, hey, we get to farther together. And if I'm selling an apartment complex, that doesn't mean it's a bad thing for you to buy it. It's just you're at a different cycle place than I am, and my turn is to go to the next one, and yours is to come up behind me. And so real estate's been a very communal type education environment. And so it's good getting with guys like you and guys like my groups that
Sure.
we learn about what we're doing. And like, I'm going to use hard money loans. Well, I used to live in Columbus, Ohio, and I was in a real estate group a little bit, and you had all these hard money lenders. And I was like 14%, 3% origination and interest only, 6 months. That just blew my mind. And I was like, okay, I watched Sopranos. I know what a loan shark is. Like, if I take money from this guy, will that house close? Like, is that legit? Will I have first lien? Like, they're going to get first lien. Was it my house? And what happened? Like, are they going to just try and take it from me? Like, I didn't know how it worked. In theory, I did, but I didn't know anybody that had done this. So I could have read all the brochures about how, because I did, about how this works. But I'm like, I'm still not going to borrow money from you because I don't know who you are. And at 14%, like, that's just wild. And then later on, I got in a real estate group. And then they're like, hey, I just did this house. And then one group that were clients of mine, like, they'd bought like 17 houses, like, boom, 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 boom. I'm like, how are y'all doing this? They're like, oh, you need to come up with a meet with our group. And then they used this hard money lender. And then I was like, you know what? That's, if they did it and I saw what they're doing, I'm going to do it. Sign me up. And it was because of that network that got me past that
Yeah.
comfort zone or uncomfortable level into like, okay, I'll do it. And then that changed my life straight
But
up.
if that same lender would have come to you, Kyle, without the reference of the group and the context you had,
Never would have touched it.
I was going to say, I doubt you would have ever touched it.
Never would have touched it. But I needed to see
Yeah.
that
Somebody that done it, somebody that worked with them.
those guys just did hard money. They did it and they refinanced it. It all worked. They have a Fannie Mae Freddie Mac mortgage now, and it cash flows, but it was scary money at first, but the bank wasn't going to finance it. And they were able to go quick and move quick and get hard loan money to do the rehab. And because they used that lender, I used that lender. And that's how it worked. It was all through networking, and I learned from them. They didn't lose out on educating me, and I didn't take advantage of them by them educating me, but that's how I got farther along. And that group cost money to join too. So it's just kind of the way it works.
Well, it's definitely a pay to play industry,
Yeah.
but it's just about how much you pay. So for
I paid
your audience, I
$500.
mean, huh?
I paid 500. It was the best $500 ever. But I already knew it all. I just needed to know
You
about
wanted somebody to
data.
hold your hand.
I needed validation. Like, I could do all the work. I knew I could do it, but I wanted validation that these are the right vendors to use. Like, is that the right refinance guy? Is that the right? Because I've bought houses and then or I've had clients buy houses, and right before closing, you're like, no, we're just not gonna be able to fund it. I'm like, wait, whoa, whoa, whoa. You had everything. Like, well, underwriting changed or something like. And so I've always been afraid that a thing won't close. So that's why I've always gone off of people I know.
Well, and it's real estate is a team sport, is the bottom line. Real estate, whether you're in single family or multifamily, it's a team sport. And the other cliche that I'm sure you've heard is your net worth is your network.
Yeah.
So, I'm sure that you can call me, I can call you in the future and ask for advice, and you'd freely give it because, as you said, that's just the way the community is. And not all communities are that way in other industries. But yeah, it comes back to you were educating yourself.
I learn from every single person I interview. It's unbelievable. Yeah. And then I've got a gentleman in Houston I'm going to refer to you too, because we talked about some of the stuff you got going on down there. And when we're off, I'm going to send you.
I'm always amazed that I'm so a finance guy at heart and I was very anti paying to play.
Mhm.
To join one of these large large national educational arms that wanted tens of thousands of dollars. I just wasn't going to do it. I probably could have afforded it, but I wasn't going to do it. And I'm amazed, though, that there are so many other options out there if people really want it. And that though people are reluctant, you spent tens of thousands of dollars on your college education, or other people in their trade schools or whatever, but are reluctant to put any money in their real estate education. Yeah. And so you don't have to put tens of thousands in there. There are other venues. You can go free and listen to podcasts like yourself, read books. There's tons of different the information meetups. There's so many more meetups out there today. They were non-existent when I got started. And so the
software, like that stuff's gone like through the roof. When I got started, I had Excel spreadsheet basically. And now you got software that does amazing things. And it's gone so much, like the groups, there's more of them, the software, there's more in it now than there used to be as far as resources.
And it's the same way with multifamily. You got a lot of venture capital firms chasing software development for this space. And I'm sure, like you said, single families got their own as well.
Well, single family really changed since I got in. So we're 2025, and I got in 2002, 2001 range. And it was just a mom and pop business. Like some guy would have three houses, some guy would have one, some guy like it wasn't real big. And I
Mhm.
remember hearing a quote, and people quote it all the time. Was it Warren Buffett that talked about how, if he could figure out how to manage rentals, like he'd hold a bunch of single family rentals. Um, and he didn't figure out that equation, but America Homes for Rent did. And all of
Yes, they
these,
did.
and they proved that that asset class could happen on a larger scale, that you could manage larger a number of single family homes, scattered site, and then everybody flooded in. And that's when we saw just ungodly amount of money fly into single family homes, which put some squish on some of the guys like me, but it also pulled the value. There's a lot of benefits that came along with it.
Well, I'm sure it created a niche for your business that you
Yeah.
weren't the American Homes. And so you were the, I'll call it the
Yeah.
neighborhood true value store versus the
Yeah.
Walmart.
Yeah, and so American Homes Rent, one of my gentlemen that runs my maintenance department and make ready department came from American Homes for Rent. So we were able to take all of that corporate knowledge processes and apply that to my smaller firm. So I've been real fortunate in that regard.
Do
But
you think?
that's where with all of those big corporations coming into the single family it institutionalized that asset class to where now you have the software companies because they know, oh, well, there's a lot of people that can afford the software, so we're going to develop for it and make it happen. So much has happened. And I think that's also gone, and then it bled over into apartment complexes too, from what I can tell.
Oh, yeah.
So it's just really, it's going to be really interesting where that all this is in 20 years.
Do you think that that private equity, venture capital intrusion into single families drove prices up across the country?
On purchasing homes,
Yeah, on single family
probably.
homes.
Yeah. Yeah, I would think so because I know they picked up the slack when the market tanked. And so they were able to purchase homes that would have gone for dirt cheap or not at all and taken a long time to fill those in with
Yeah.
homeowners. So I think so, but I think what it's done is it's made it more socially acceptable for people to invest in real estate as a class. Like I've got friends now that own rental houses that never would have because they were so dependent on their 401k and their Roth IRA and like the real estate. No. Well, now that you got institutional investors buying, like, oh, okay, well, maybe it is a good decision. And then, oh, I can buy a REIT that buys single family homes because there used to not be a REIT that bought single family homes. It was all
Commercial.
commercial. And now that you've got single family home REITs out there. So I think people are more open to it. So that raised the values because, basic supply and demand and, interest levels higher. So yeah, it has. I don't think that's a bad thing. I just think
Yeah.
it's a natural and it's an inevitable, process.
Yeah, and I just wanted to. I'm just thinking as you were speaking there, you started out earlier with what am I doing today, and so I wanted to kind of go forward to that. I've started out in the single family. I've done multifamily, and for I guess for 25, I did a deal in 24. I mentioned the BTR project, but for 25, I'm kind of changing directions a little bit here. I really am looking to build in Houston a duplex. So I looked at the numbers, and if you build a couple duplexes a year, I can probably make as much as I do as a capital raiser in 3 to 5 years on a single project. So I'm excited about. I'm chasing. I'm at the very early stages. I'm chasing lenders. I'm trying to find some land, builders, et cetera, et cetera. But there seems to be a mass market for those duplexes where somebody could house hack, live in one side and rent out the other side, or you get a lot of those California investors that just want, to buy something for three, four, $500,000 that they control.
Mhm.
Back to your point, versus a large syndication where they have no control.
Yep. They
Just an
want to buy
investor.
multifamily, but they don't like single. So this is like the fall in between.
Yeah.
So
Yeah.
I've got a gentleman, and I was Googling him, going to my website, howrealestatechangedmylife.com. And see episode 3, Steve Straczynski. He lives out in East Texas, and that was his story. He had some single family rentals, but then he's like, no, I'm going to be building these duplexes. So he's got a little, almost a subdivision of duplexes now, that he rents, that he built from
Nice.
scratch. And that was a real good episode, listening to him talk about his logic and his long-term plans. And he's not really I'm not going to say overly ambitious. That's not a negative thing. He's not
Yeah.
himself, but it's a very long-term strategic move that's life changing for the generations below him. Like, I know his son came up and stayed up here in Keller for a week and just shadowed my office so he could take ideas back. The kid's like, he was 14 or 15 years old, and
Oh my gosh.
intern. And I'm telling you, it was great. We had so much fun. He was so inquisitive. Like, what are y'all doing? Like, how are you doing this? What are you like? And so it was a blast. And his son's same age as mine, so they became fast friends. So it was real neat to see that next generation
Yeah.
kind of already know what not their path, but kind of understand what the options are on their path that they're going to take. But
There's an example though of mentoring slash education and a parent that got somebody, I wish it's like I wish somebody put a golf club in my hand when I was much younger, and I wish somebody would have showed me an entrepreneurial path much earlier in life too. And there's nothing wrong with the corporate world. There's nothing wrong with the corporate world at all, contrary to what a lot of big box teachers will tell you. It worked for a lot of people and invested passively. But yeah, how cool is that to see the inquisitive nature of a 15-year-old kid that really wants to do this? And
I know, yeah. So I'm trying to do what I can to feed my children options in
yeah,
life, because I grew up in East Texas, wonderful place. I love Longview, Texas. That's where I grew up. And I would absolutely love to be able to raise my kids there, but that's just not an option for me, because I've got a sizable company that wouldn't
yeah,
exist out there. So I'm trying to do my best on educating my kids as they're being raised. And so, like, my son, he drives an electric vehicle. So I can't say, hey, you got to go work for gas money, because he plugs it into my house every day. But I'm like, hey, your gas money is you're reading these books, and we're going to talk about them as you read them. So first book was Rich Dad Poor Dad. Second book's Cash Flow Quadrant. You got Millionaire Next Door coming. And I got some Christian books coming too. So there's all of these things that I want him to learn about. And the other thing is, like, in East Texas and Longview, when I grew up, there was like, well, mom's a banker, dad's a teacher, neighbor's a doctor, neighbor's a CPA, neighbor's an engineer. There must be no other professions in the world.
how
And
true.
so I'm in Keller, Texas, and it's a different environment. It's like, oh, I'm in private equity. We're doing this thing. Oh, I'm an angel investor. We're doing this. I do apartment complexes. This is what I got. I'm a
Yeah,
CFO at XYZ company. I'm a research scientist with Texas A&M Aggie Extension. My kids are exposed to completely different professions. And so that's really where I've been trying to put a lot more energy and effort in that. And, like, all of our friends, like, none of these people have professions that I even knew existed. So I'm trying to get my children exposed. So Steve is doing a great job with his son doing the same thing.
well, that's way cool. That is way cool. They got a parent like you then that lets and just exposes them to those different types of venues. Because yeah, I'm the same way. I grew up. My father was an engineer. He went to work for Whirlpool Corporation. He worked there for 35 years and retired. And nothing wrong with that. He was well off when he retired, but there are other venues out there. That's not for everybody.
Well, that story is not as repeatable anymore. The
That's
gentleman
true.
that was on right before you, and I think when they land, his father worked for Hidden Lakes. Is it Hidden Lakes, or is the butter company?
I think it's Canyon Lakes.
Can you like okay? So he worked his whole life through there and retired, and you just don't hear that anymore. Like
Oh,
the generation above us, like, yeah, they worked at the same corporation for 20, 30, 40, whatever. And now, like, we had our homes group Bible study group last other night, and one of the gentlemen was like, yeah, he's been with this company 16 years. I'm like, That's awesome. You never hear of
that
people
anymore.
being in the same corporation for more than, I would say, 10 years. I mean, that's about
I
it.
was going to say in my corporate career, I had 5 different employers. The longest I was ever at one place was 11 years. And and my
Well,
kids, millennial kids, they still do not have multiple jobs. They'll have multiple careers.
yeah. Well, then you mentioned private equity in your background, and that whole business model is buy, scale, and sell. That's what I understand. So, like, you automatically are transitioning out at some
Yeah,
point on the upper end.
and it's a fairly short window. But yeah, the private equity world is just all about increasing cash flow, period.
Mhm.
Selling it at a multiple of cash flow, whatever industry, whether it's manufacturing, multifamily, single families, it's all about increasing cash flow. Because at the end of the day, that's why businesses exist, is to create cash.
Mhm.
And you can create, increase cash flow by new business, adding new lines of business, reducing expenses, any combination thereof. And it creates value for the shareholders of that private equity firm. And
Well, I
so
need to.
there are more private equity deals in the country today than there are stocks. There are
I'm
more.
not surprised. I own a couple of home service companies, and every day there's a private equity firm approaching me like, "Hey, will you sell your maintenance company? Hey, will you sell your property management company? Hey," like constantly, and they're just trying to roll them up and then
Yeah.
sell them, and then like it's so fascinating. I don't see myself ever selling, but it's fascinating that business model and how you create. I own an insurance agency, and so I bought a small one last year, and just by bringing that into my fold, I increased the value of my company
Sure.
more than the value of what it cost me. But the guy that I bought it from, he got the fair market value. But since I
Yeah.
rolled it into a bigger company, it was worth more. So it's very fascinating how that whole thing works.
Well, you just gave the best example of all. You on a very small scale, personal to you. Yeah, that is the model. You had more cash flow from the addition of that one small company in your insurance business than you did on your own, and it's all about cash flow again. So
Yeah, very interesting.
see
Well,
the
I don't want
price
to take
of
up too much of your time, and I really do appreciate you sending your knowledge out to all of us and your story and your history, because I think it is very important that people know there's a lot of options out there. And I do want you to provide all your information because I'm going to put it in the notes below on
great.
your group, but then also I know you have a website for when you do syndicate apartments from time to time, and you've got some pretty good examples. You've done it quite a bit. It's out there. Um,
Yeah. So we've got, I've got two websites, invest-arc.com and Multifamily Maestros. I'll give them both to you. If anybody in your audience wants to talk, there's a contact me on both those pages, or, my cell phone number is 281-410-5659. Call me, text me. Love to catch up with you if you want to talk about anything real estate. And Kyle, I just really appreciate being on the show, man. It's been a lot of fun.
All right, well, I appreciate it. Thank you so much, and look forward to hearing more about your new wins coming down the pipe.